Ladies and gentlemen, welcome to the final video, I think, for the project. Now, as I mentioned in the previous video for vendor-related transactions, I mentioned loans. Now I'm scrolling through to show you where your loans will be located. The first loan was the 15th of January that you got from Scotiabank. And then there's another loan which you would have had in February. I'm just scrolling. Here's the other one on the 15th of February. Now in the loan for the 15th of February, it gives you the principal, how much it is that you're borrowing, and the fact that you have to create a second bank account to receive the funds. But in addition, it breaks down the monthly payment. You're paying $110,103.65 per month. And for that first payment you made in March, remember now, you will get the loan in February, but you start repayments the 15th of each month starting March. So basically you only have one repayment to consider, and they broke it down for you between principal and interest. Okay, but the other loan, they did not give you any detail. All they told you was the amount of the loan, how long it's going to take you to pay off the loan, and the interest rate. Now, if you're paying the 15th of each month starting February, it means that you have two loan repayments to make, one for February and one for March 15th. Now, there is a tool created by Excel called Loan Amortization Schedule. I'm going to open it. Now this schedule is very, very useful, and we are going to need it to suss out what are the figures for the repayment for the loan you're going to get in January. So let's just quickly go through that. Now over here there's a section that says enter values. Once these values are entered, you have a host of repayment periods. For this one, only 10 periods are given, but if you can expand the sheet. You can expand the sheet to get more payments. It will be one per month, essentially. So the summary will be over this side. It will tell you what your monthly payment is, how many of them you have to make, and what is the total interest. This is always the worst part. How much interest you'll be paying back to the financial institution at the end. So let's run this for the transaction for the 15th. Let's go back to our Excel sheet, Appendix 6, and take up the details. We have the principal for the loan is $800,000. It will be over a 2-year period, and the interest rate is 24%. So let's go back now into the amortization schedule and put in that information. Now the loan amount is $800,000. I didn't bother to put in any cents or commas. The system does that for me. The interest rate, I'm just going to type 24 because the percentage sign is preset. Then the loan period in years, we said it was for 2 years. Number of payments per year is going to be monthly payments, so it will be 12 per year. and your loan will start on the February 15th. So 2021-02-15. And there'll be no additional payments that you'll be making. So once we do that, let's see what happens. And the loan summary tells you that you'll be paying out $42,000 per month. It's telling you that you'll be making a total of 24 payments. Because we're now in 2022, it has assumed that the loan is still in progress, and it is indicating that you've made 13 payments so far, meaning from the 15th of February until today. There were no early payments, but look at this. This is the amount of interest that is going to be recovered over the life of the loan, the 2-year period. And I think it was National Commercial Bank. It didn't indicate who the bank was. Let me check. No, it was BNS loan. So the loan is Bank of Nova Scotia. Let's call it by its new name. It's called Scotiabank. All right, now what is this saying? Scheduled payment, $42,296. That is the fixed amount each month. However, part of it is principal, part of it is interest. So your interest or your focus is going to be only these 2 months because your loan is received in January. You make 2 repayments, February and March, and then your transaction period, as far as the project is concerned, would be complete. Now, interestingly, I want to focus just on the first payment. Remember, now you're going to have to do the February and March payment, okay? But I'm going to focus only on the February payment because I need for you to understand the journal entry behind this. So I'm picking up the $42,296.88, which represents the fixed monthly portion. Now for February, the principal will be $26,296.88, and the interest will be $16,000. So it means, therefore, at the end of February, the interest that will accumulate will be $16,000. In March, it will be $31,000. The balance of the loan, notice that the loan balance will start to shrink as the principal is repaid. Notice that the principal amount gets less each month. Sorry, gets more each month. So we're starting with $26,000, and it creeps up, or it inches up over time. The interest, on the other hand, reduces over time. But the net effect is that it's the same amount that goes through every month. So let's take a hop over here to the double entry. Now, when you receive the loan, you're going to have to debit whichever bank the money is going to go into. And then you're going to credit the loan account. So in this case, it will be BNS loan. So I'm expecting to see a Scotiabank loan account in your general ledger for the $800,000. 800, So in January, this money came in. Now in February, you're going to start paying it back. So we're going to now repay the loan. Again, you're going to debit and credit, but what are we going to debit this time? We're going to debit the loan account, so it will keep shrinking each month. And we're going to debit the expense account for the interest. And then we're going to credit the bank account as the amount is taken out. So if we look at our first line, the portion that is principal will be debited to the loan account, and this figure will be 26,000. Here it is, 26,296.88. The interest portion, which is this figure, will also be debited, and then the bank will be 42,296.88. So every month the bank figure will remain the same, but every month the loan amount will get bigger and the interest amount will get smaller. Combined though, they will always add to $42,296.88. Okay, so that concludes the loan amortization schedule. And as I mentioned, there's another loan in February, but you were given the repayment amounts broken down into principal and interest, so you wouldn't really need to use this loan amortization schedule. Okay, thank you very much. It's a very short video, just 11 minutes. If I think I need to give you more guidance on anything else, I will do another video, but I really want you to try to fight your way through the remaining transactions that I have not given you any help with. Okay, so try your hand at it, and remember that you can always talk among yourselves what you think is the best thing. All right, thank you, ladies and gentlemen, and I'll see you at your interviews.